Okay, and welcome back, students who are taking financial accounting, and we're working on the Chapter 1 problems, Group B, and we were working on the 1-37, and this here is part number 3, okay, and we're picking up right where we left off. Okay, we had left off with doing that third transaction for recording revenue, right? So we had done, let me get my pen here. Okay, we had completed A, we completed B, and we completed C. So D, collected cash from customer on account for 2130. Right? So I collected cash on account for 2130. So am I using cash? Yes. I collected cash, which means my cash increased. I mean, I didn't have any before, and now I have 2130 more dollars. All right. So cash is an asset. I increase my assets on the debit side, so I'm going to debit cash for 2130. And now I have to figure out, since debits have to equal credits, I have to credit something else for 2130. Well, what is that? Well, it's saying I'm collecting cash on account. On account is the term we use for our accounts receivable or our accounts payable. Accounts receivable is an asset, right? Because people owe us money, and accounts payable is a liability because that's when we owe other people. But using the word on account applies equally to either or. So it's a matter of you have to determine, which one it's going to be. And in this case here, well, since somebody owes us money and we're receiving it, obviously it has to be an accounts receivable. I mean, if we were paying money out, on account, that would be paying off our accounts payable. We would be decreasing our cash. So in this case here, I debit my cash and I have to credit my accounts receivable. All right. Now, since my cash is going up by 2130, I put that under my cash column, but for my accounts receivable, I am decreasing it by 2130. All right, because I have 2130 less in accounts receivable. All right, that's D. Okay, E, purchased supplies on account. Well, that's just the opposite of what I just did and sort of what I explained. So I have a debit and I have a credit, okay, and I am purchasing supplies on account, right? My first question that I'm asking is, am I affecting cash, right? And the answer to that is no, right? Because why? I'm buying them on account. So if my answer to that first question is no when making a journal entry, my second question is, am I affecting accounts receivable or accounts payable? And I just explained that I'm affecting accounts payable. Well, if I'm affecting accounts payable and my accounts payable is increasing from whatever it was, and it's increasing $850, okay, my accounts payable is a liability account, and I increase my liabilities on the credit side. So I'm going to credit my, I'm going to credit my accounts payable for $850. That means I have to debit something else because debits must equal credits. All right. So what am I going to debit? Now again, I'm just backing into this information. Oops, erased too much there. I'm going to back into that account. Well, what am I buying? I'm buying supplies, okay? But notice that it doesn't say, the transaction doesn't say, it says purchase supplies. It doesn't say purchased supplies expense, or it doesn't say purchase supplies in the, sorry, it doesn't say purchase supplies for the operation of the business. Okay, it just says purchase supplies. So when we're purchasing supplies, it's sort of like, you going to, the grocery store and you pay, I don't know, $7 for a watermelon. Well, now you take the watermelon, you own the watermelon. Okay, well, it's the same thing with supplies. Now, if I had cut the watermelon open, that means I used it. All right. And if I have supplies that I use in the operation of my business, then that would be supplies expense. But in this case here, it's just saying I'm purchasing supplies, so I'm owning the supplies, right? And so therefore, I see I have a general ledger account called supplies underneath my assets. So I have a debit to supplies for $850. So I post that entry to the ledger account. So I have 850 because it went from 0, increased to 850. And since it's on account, my accounts payable is increasing 850. Okay, that's my credit to accounts payable. Right. Consulted on the interior design of a major office building and billed the client for services performed for $6,200. Okay, so I'm billing the client. Well, if I'm billing the client, all right, that means I'm extending them credit, right? And the services performed was for $6,200. So I ask myself, am I affecting cash? And in this case, it's no. Why? Because I'm billing the customer. So that leads me to question 2, am I affecting accounts receivable or accounts payable? Well, the answer is yes. Why? Because I'm billing the customer, and when I'm billing the customer, it's an accounts receivable, right? So I'm extending them credit. I'm giving them, credit on account. So I'm going to, since accounts receivable is an asset, I mean, I don't even have to think in that respect. I mean, I could say, since accounts receivable is an asset, I increase my assets on the debit side, so I would debit accounts receivable for the $6,200. Okay, but remember, it's easier to associate things to what you know. Okay, when you want to learn something, it's easier to learn by association. Well, since accounts receivable is an asset, I treat it the same exact way as I do cash. And it would be, whether it's supplies or equipment, I treat them the same exact way as I do cash, right? Because they're all assets. I increase all of the assets on the debit side, all right? So I debit my accounts receivable for $6,200. That means I have to credit something else. Well, I'm performing services. That's the operation of my business, right? And of course, when I'm performing services, that means I'm making sales or revenue. So I look for my revenue accounts, all right? And I see I have service revenue. So I'm going to credit service revenue for $6,200. So that's my journal entry that I'm going to post to the ledger accounts. Okay, so accounts receivable gets an additional $6,200, and my service revenue increases an additional $6,200. Okay? And just as an FYI, when it comes to revenues and expenses, 98, 99% of the time, they're always going to be increases. It's rare that you're ever going to decrease, accounts on your income statement, okay? With the exception of cash over and short, which is a whole nother subject for another chapter, okay? But just be aware that when it comes to any of your assets, liabilities, assets and liabilities, okay? And oftentimes your common stock, okay? Well, let me back up. Yeah, assets, liabilities, and retained earnings. You are going to increase or decrease those accounts. But generally, your common stock, your revenue and your expense accounts, and your dividend accounts, you're always going to be increasing them. It's rare that you decrease them. You only decrease them when you're like the revenue and expense accounts and dividends, you're only decreasing them when you make closing entries. All right, but that was just an aside. Okay. All right, so that's that transaction. All right. Sold an additional $7,000 of common stock in the business. All right, so that's kind of like, A up here, right, where she purchased common stock. So I'm selling common stock of 7,000. So debit, credit. I'm receiving cash, so I'm going to debit my cash for 7,000, and I'm going to credit common stock for 7,000. Okay, so an increase in my cash for 7,000, and increase in my common stock for 7,000. Right. H, incurred and paid salaries of 4,600. Right, so I'm in 4,600 is my salaries, right? And it says incurred and paid. Well, when I'm paying, aren't I using cash, right? I'm asking myself the question, am I using cash? Well, yes, I am. Okay, so is my cash increasing or decreasing? Well, my cash is decreasing. Well, if cash is an asset and I increase the assets on the debit side, that means I decrease the assets on the credit side. So I'm going to credit my cash for 7,000, and that means since debits must equal credits, I have to debit something else. So it's a matter of what am I looking for? Well, I know that payroll is part of the operation of my business, and I know it's not a sale, so it has to be an expense. So I'm going to debit salaries expense for 7,000. Okay, so that is my journal entry. All right, that's my journal entry. So, no, not 7,000, 4,600. I'm sorry, the salary payment was for 4,600. All right, so I'm decreasing my cash by 4,600, and I'm increasing my salary expense by 4,600. All right, so that was that entry. All right, let me finish off these last two entries. Sold supplies at cost to another interior designer for $250 in cash. Okay. Right, so debit and credit. Am I affecting cash? Now I'm just writing the 250 here so I remember it. Am I affecting cash? The answer is yes, because I'm selling the supplies to somebody else. Well, when I sell the supplies, is my is my cash increasing or decreasing? Well, it's increasing because I'm getting 250 for it, right? So I'm going to debit cash for 250, right? And what am I selling? Well, I'm selling my supplies, which is an asset. So I credit my supplies for 250, right? That's my journal entry. So when I post to the ledger accounts, my cash increases 250 and my supplies decrease 250. Notice that, a lot of people, and it just occurred to me, a lot of people, their debits don't equal their credits for the simple reason they say, oh, I make my journal entries correctly, okay? But when they go and they post to the ledger accounts, they make the postings incorrectly, and then, their debits don't equal their credits. Remember, all you're doing is you are transferring the information, you're rearranging the information, you're grouping it, in like transactions. When you have two line items, you should have two line items. And in this case here, as you saw, my cash is increasing, but my supply is decreasing, right? So I have a plus and a minus. Why? All I'm doing is just moving the money from moving my assets. I've exchanged my supplies for cash, so no longer do I have supplies, but my cash increases. Okay. All right. And then the last transaction, paid dividends of $1,500 to Schultz. Okay, so that's going to debit and a credit, right? And I'm paying $1,500 in dividends, right? So is my cash increasing or decreasing, right? You know, am I affecting cash? Yes. Is it increasing or decreasing? Well, it's decreasing. So if I'm decreasing my cash, right, I'm crediting my cash for $1,500, and that means I have to debit something else. Well, you know, I'm paying a dividend, so that means I have to, you know, debit a dividend for $1,500, right? So that's the transaction. That's the journal entry for it, and I'm going to post it. So I have I'm paying out the $1,500 in cash, and my dividend is increasing to $1,500 because I had zero in dividends before, and now I've paid out $1,500 more, so it increased to $1,500. So that's a positive number. Okay, so with that, I'm going to stop right here and pick up creating these financial statements. So what I have to calculate the new balances, all right, after each transaction. Well, I'll do that in the next video. And so, you know, watch the videos again. And if you don't understand something, you know, pause, rewind. And if you still don't get it, you know, feel free to contact an instructor. And I'll see you in the next video for the next part of this problem.